Well, some of the major stories making the headlines across Africa, but the focus is on energy and possible impacts on the African economy because a new United Nations Trade and Development report is now predicting some social economic impacts on developing countries as the tension in the Middle East continues, as the Strait of Hormuz, a major shipping corridor, remains closed by Iranian authorities. UN trade officials are now indicating that many developing countries already faced with high debt service burdens and also limited fiscal space and constrained access to finance could now face some new challenges in the context of rising energy, transport and food costs, which will now strain public finances and also increase pressure on household budgets, potentially heightening economic and social pressures, and that will also complicate progress towards sustainable development. So here's a sense of, for instance, the impact on energy, which many African countries are beginning to face already. And in terms of disruptions in the straits, it's compromising energy supplies, particularly to Asia. If you look at the volume of crude oil and liquefied natural gas transported through the Straits of Hormuz in 2024 alone per day by destination, we're looking at 14.3 million barrels per day. And you see, in terms of liquefied natural gas, we're doing over 10 billion cubic feet per day in terms of the volumes moving through that strait. But there's a bigger impact, as this report is pointing out, on socioeconomic impact for African countries or developing countries as a whole. Let's bring in Ikemesit Effiong, who's the head of research at SBM Intelligence. They, of course, have also a report pointing to similar concerns. Let's get into it, Ikemesit. The point about what's going to happen to many African countries looking at the Middle East tension. Do you, first of all, project socioeconomic impacts, and how dire will the situation be for many developing countries in Africa? Already at the pumps, some countries are feeling it.
Yeah, absolutely, Blessed, and thanks for having me on the program. Yes, there will be significant socio-economic impacts, right? We're already seeing some of the earliest manifestations of that in domestic fuel prices right across the continent. Obviously, the varying levels of exposure differ from country to country. East and Southern African countries have been particularly impacted, largely because a lot of them do not have hydrocarbon resources of their own. The picture is a lot more contextual in West Africa, for example, which has more hydrocarbon resources of its own, but because the global crude market is as it is, it's a global market, as it were. There have also been those price fluctuations. There are also important concerns around food security, right? Because a significant amount of the fertilizer as well as other hydrocarbon-related farming inputs, right, that is imported by the continent originates from and transits through the Persian Gulf, and that has also been a victim of the supply disruptions that we've seen over the last 2 weeks, right? And so there's a follow-through inflationary impact, which is likely to be manifested right across the continent. There's a new survey that came out, I believe this morning, right, which already projects that inflation in South Africa, for example, will jump up a little higher than expected. Inflation in Ghana and Nigeria has been softening in recent times, but this could easily tip the scales right in the opposite directions. I know that central bankers and policymakers in both of those economies will be looking at this closely. I suppose the final point that I would make with respect to your question would be with respect to the wider socio-economic impact with respect to security. As we know, the Sahel, especially the Western Sahel, has been a theater of operations for a global jihadism for a while. And with the increased American engagements with partners, especially in West Africa, and particularly the coastal West Africa, you could easily see a situation where Western military as well as Western economic infrastructure in this part of the world also becomes also enters sort of the targeting block for some of these groups who are, while not fully aligned with Iran and directly impacted by the developments in the Middle East, would easily use the United States as a straw man as an opportunity to carry out opportunistic attacks right across the region. So economically, but also socially and on the security side, there are potential impacts that this conflict is likely to result in our part of the world.
Yeah, and many have been asking the question, why Africa will be bearing the brunt of something which is happening way away from the continent. How do we draw the link then, knowing that this is a resource-endowed continent? And talk about Nigeria, for instance, which is an oil-rich country. Why should the effect be on these countries?
Well, a couple of things. First, it's a globalized and it's a highly connected world, right? And especially when you look at the movements of natural resources, a lot of them are tied to needs to long-term contracts, right, between producing countries and consuming countries. A lot of the producing countries are in the global south, and a lot of the consuming countries, obviously, are in the global north. So there is that bit. Also, the fact that a lot of African countries don't actually process a lot of their resources. In Nigeria, for example, we've only significantly onboarded new refining capacity within the last 24 months. So this would have actually been a worse situation, right, without the presence of the Dangote refinery. If this conflict happened in 2022 or 2023, we would have been looking at really, really serious price shocks and ricocheting right through the Nigerian economy. The same can be said for many other African countries, even if they may not be importing from outside the continent. Just the fact that you're importing from within the continent and you're dealing with resources that are priced one in dollars and two, right, within international commodities markets. Any significant geopolitical development in a critical part of the world was always likely, right, to be impacted. The third, and I think the final bit, which leaves Africa particularly sensitive to exogenous geopolitical shocks, is just the fact that we have very little bargaining power economically, right? Especially when you compare where Africa sits with the rest of the world, we are still very much an origin point for a lot of natural resources. But a lot of the institutions, the economic mechanisms, the diplomatic structures on which these goods are negotiated on, or priced, or moved, or shipped, or refined, right, or consumed, Africa simply doesn't have any leverage, right? So even though these resources are African, the ownership, the management, the supply chain architecture that underpins their utilization is decidedly non-African, and because of that, any non-African external shock, right, is always likely to have an impact here on the continent.
Let's look at this picture then, the story of Nigeria, and how Nigeria and Angola could have been the best bet for many African countries in terms of substituting imports. Why is that not working? Knowing that, for instance, there's a significant investment from the likes of the Dangote Group, for instance. Why is that not working, and that many of these countries are still heavily reliant on importation of petroleum?
Well, I don't know if I would necessarily agree and say that Nigeria and Angola are necessarily putting their weight and it's not working. I think the situation is a little more layered. Nigeria, for example, right now fulfills something like 93% of its domestic fuel needs now from domestic refining, which is a sea change from importing practically all of our energy use just 2-3 years down the line. Angola is a little bit of a more stable environment from a regulatory and from a political standpoint. And actually, Angola has represented one of the most attractive, right, regulatory regimes on the continent from an oil and gas investment perspective. And now with no clarity in sight in terms of how long the conflict in the Middle East is going to last, Iran appears very committed to drawing out this conflict for as much as possible. And also when you square that with the fact that many other countries are not willing to take up the call by the United States to contribute naval assets towards unlocking and reopening the Straits of Hormuz. Suddenly Nigerian and Angolan crude cargoes, right, are becoming more attractive because Europe and Asia is scrambling, right, for, as much crude supply as they can secure. And there were 4 Nigerian crude cargoes, for example, that have basically been sailing the seas for the last 2 months looking for a buyer that were all bought up just last week, just because the geopolitical situation has changed. India, which has not bought Nigerian crude for almost 4 years now, will take delivery of some Nigerian and some Angolan crude cargoes within the next couple of weeks. So, if anything, just from a narrow hydrocarbon, oil, and gas related perspective, some of the African operators, right, are are looking at a little bit of a positive outlook in terms of renewed interest in their productivity. I see, for example, Algeria also being a net winner, right, in this regard, again, because of their, amongst all of the other advantages that accrue to African oil and gas producers, they are also very geographically close to Southern Europe, right? And this is March. This is the tail end of winter. Spring is still starting, but it's still quite cold there. So gas consumption is still at very elevated levels, right? Within European markets. And because of the higher prices now, they will be, a lot of these African producers will be selling at a little bit of a higher price point since all of their cargoes are tied and pegged to Brent crude. So whichever way you look at it, that's why I say the viewpoints and the outlook is a little bit contextual, right? Because we may be dealing with a set of increased domestic prices, but if you are a player in the oil and gas space right now, with spare capacity or with the capacity to bring more oil and bring more crude, right, to the market, this is not the worst time in the world for you. Oil and gas stocks right around the world, right, are seeing some of their best performance in I think, the previous 6 to 9 months. So, whichever way you look at it, it's probably a good time if you are a producer that is not based in the Middle East, but you are a player in the oil and gas space. And I think what countries like Nigeria and Angola needs to do now is to um, recognize that, and this is one of the points that we make in our reports, that this disruption may be temporary. The conflict will reach, will find an ending point at some point. It may not be quick, it may not be now, it may not be next month, it will certainly not be next week, right? But the dislocations that it has created within the global economy will not be temporary. We're entering what we see as a reframing and a realignment of global trade flows. And what African producers and what African economies need to do is to be very smart about their positioning, not necessarily by taking sides, but ensuring that the right policy frameworks and the right infrastructural investments goes into their economy to ensure that they are more significant and they are more influential players.
Right. There's the question about projection and how long this will last. Are we able to do a fine permutation of how long this is projected to last?
You're putting me on the spot a little bit there. That's right. I don't know that anybody knows. I don't even think even the protagonists right now of this conflict, right, have any idea. The U.S. president, right, for the last 3 days has basically declared victory on Iran to counter. I would say if this was the first round of exchanges between the U.S. and Israel and Iran, then my best judgment would have been that this would be a relatively short conflict, just as we saw last year, right? The war just lasted 12 days. But because this is the second time, and this happened within the framework of active negotiations between the Iranians and the Americans, the Iranians are significantly incentivized to make this as costly as possible for everyone involved, not just the United States and Israel, but also American allies within the region. So they are incentivized, and clearly the world is now recalibrating its perspective on Iran's military fighting capabilities. clearly they have more missiles and they have more of a military capacity to carry on this conflict than previous assessments suggested. So my sense is that this conflict lasts at least through the end of March. But anything beyond Easter, the first week of April, I really couldn't tell you. We could have this conversation in April and we will check in and see where we are.
Well, that's all. That's all. Yeah, obviously that's all we can do. Hope and pray that things would improve. But the last bit about policy cushioning, if that's the right word to use. What's the expectation from African governments? Policy considerations in the meantime, while the ripple effects, hit many African countries. How can central governments now cushion their citizenry?
Well, I think for many African countries, I think some form of fuel price cap or some form of an intervention in the domestic fuel markets would probably be necessary or required, especially if this conflict becomes, really drawn out, as a lot of us expect it to be, right? African governments do not necessarily have the best track record when it comes to managing subsidy regimes, but this is one of those moments where actually having one, right, would help, especially considering the income levels and the income thresholds of many African households, right, at play. And because, energy consumption and its outsized impact on things like transportation, food, logistics, supply chains, electricity generation, it is outsized, right? One could make the argument that, having a fuel price cap would have sort of like a cascading effect, right, on other downstream parts of the economy. So that would be, sort of my key points. I also think African governments should talk a little bit more to each other. There are certain parts of the continent that would probably do with negotiating some short-term preferential treatment and preferential agreements, especially in terms of food imports and food export flows, because Africa is more of an outward-facing continent in terms of, where it sends its primary exports commodities to. There is an argument to be made that we could use the opportunity of this geopolitical pain point to negotiate and begin economic interactions within the continent. There are African countries that are net producers and net surplus exporters of important food items that may be needed in other parts, right, of the continent that are dealing with exogenous price shocks. So having and negotiating some of those preferential, right, export arrangements so that goods that are needed in one part of the continent are sent to other parts of the continent are a little bit below prevailing market rates. That would also help with, cushioning some of the effects of what we're seeing now. Those will sort of be the two sort of short-term, immediate priority areas I think African governments should be looking at in order to mitigate the shocks that we're seeing right now.
Well, grateful for your time. Ikemesit Effiong, Head of Research at SBM Intelligence. Thank you for your time. And still to come, we'll be focusing on the recruitment of Africans into the ongoing Russian-Ukraine war. When we get back, we'll tell you about Ghana's concerns and what it has been telling a Russian Federation delegation which recently visited the country.